Let's start with accounting standard number 7, accounting for construction contracts. These are the points which are required to be discussed today with respect to AS7. The applicability part, definition, types of contract, what do you mean by contract revenue, what is contract cost, securing cost, recognition of contract revenue, and provision for expected losses and disclosure. Now, coming on to the first part here itself, I can write down applicability. This standard is applicable to whom? So, it is applicable to contractor and not builder or developer. That is the most important part. So, I own a piece of land, and on that piece of land, if I construct a building and sell off the flats or shops or commercial premises, then I'm referred as a builder or a developer. This accounting standard 7 is not applicable to me. But the same piece of land, I tell somebody, Mr. X, that construct me a building and give me back. He constructs a building, I pay him the consideration. In that case, he would be referred as contractor, and this standard will be applicable to Mr. X, who is the contractor. Yeah, so it is applicable to contractor and not builder or developer. Coming on to definition, there is nothing but what do you mean by construction contract? A construction contract is a contract specifically negotiated for a construction of an asset or group of asset. A construction contract is a contract specifically negotiated for construction of an asset. Now see, I'm using the word asset. That doesn't mean it is always building. It may be machine, it may be roads, dam, bridge, whatsoever. So construction contract is a contract specifically negotiated for construction of an asset or group of asset. It also includes contract for demolition as well as restoration and services provided in the contract. So if I'm providing some architectural services also, that will also be included in my construction contract. So the definition of a contract, a construction contract is a contract specifically negotiated for construction of an asset or group of asset. Means it's nothing but a turnkey project. Everything is together. A group of asset, it also includes contract for demolition. Something is to be demolished and something new is to be created. So demolition and restoration. Restoration can be of an asset or of an environment, and also includes services provided and services provided in the contract. Now, coming on to the types of contract. Basically, we can have 3 types of contract. First is fixed price contract. Cost plus contract and hybrid contract. What is fixed price contract? The price is fixed. Like, I took up a work of constructing a machinery for rupees 50 lakhs. The price is fixed. That is fixed price contract. I took up a work to construct a machinery wherein it is cost plus contract. So if it is cost plus contract, means whatever is the cost I will incur, that I'm going to charge you, plus I will also charge you for my profit margin. So it is cost plus 20%. So whatever is the total cost, on that 20% will be charged. Hybrid is nothing but combination of this fixed as well as cost plus contract. Now what happens in case of an hybrid contract is nothing but to certain level I'm fixed, thereafter it will be variable. Or it is cost plus contract with a maximum ceiling, that is referred as hybrid contract. So we can generally have three types of contract: cost plus contract, fixed price contract, and hybrid contract. What do you mean by contract revenue? Because the whole standard is with respect to recognizing the contract revenue. So how to recognize the contract revenue? Let's discuss that part, contract revenue. So what is a contract revenue? So for us, the contract revenue is basically four things. The first is nothing but the contract price. The price which is decided as per this part, types of contract: fixed price or cost plus, or it may be a hybrid contract. Yeah. So contract price, variations. Variations is nothing but change in the nature of work. It is different from escalation. Escalation means what? It is always part of our contract price. It is always included in our contract price. That is escalation. Variation is change in the nature of work. First I gave a contract where the work was defined in certain parameters. Thereafter I say, no, this work has to be done in this manner. Some additions are there or some deductions are there. That is variations. Claims. Now what do I mean by claims? Claims means due to some kind of inefficiency on the part of contractee, the contractor has to suffer some damage. So this damage will be recovered from the contractee. That is nothing but claims. But remember, claims can be recognized as a revenue only if it has reached at the last level of negotiation and it is certain that the claims will be entertained. Just I make a claim does not make it as a revenue. Then the last, incentives. Many a time the contractee, in order to get particular work done in a shorter period of time, may give incentive that if you complete this work before this stipulated period, you will be getting something extra over and above the agreed contract price. That is incentive. Incentive can be recognized as a revenue only it is virtually certain that it will be received. Just in the past you were getting those incentives or your performance was good in the past, that does not make you go for recognizing incentive as a revenue. Incentives are to be recognized only if it is certain that incentives will be received. This is your contract revenue. Then comes contract cost, in which we have direct cost and attributable cost. Direct cost means the costs which are directly related to that contract are all our direct cost. Material, labors, and as the case may be. Attributable cost means those costs which can be attributed to the contract on some logical basis. This cost has happened because of this contract. Yeah, but general admin expenses, selling and distribution overhead, research and development expense, they do not form part of my contract cost. They will not form part of my contract cost. Along with this contract cost, if you look properly, we had this area, securing cost. What do you mean by securing cost? It's part of the contract cost only, but I'll take it separately. Securing cost. Securing cost is a cost incurred to secure the contract, to get the contract. So if you are incurring some cost to get the contract, that is referred as securing cost. Now what is to be done for this securing cost? Securing cost charged to contract profit and loss account, or it is to be charged to general profit and loss account. Now when to charge it to contract profit and loss account and when to charge it to general P&L account? If it is certain at the time of incurring securing cost, time of incurring securing cost, that the contract will be received by us. Means जब खर्चा करता है, at that point of time only, when you are incurring these expenses, at that point of time only it is certain that this contract will be received only by us, then that securing cost will be debited to contract profit and loss account. But charged to profit and loss account, general profit and loss account, if it is uncertain whether contract will be received by us or not. Now, if it is uncertain that whether the contract will be received by us or not, then it will be charged to general profit and loss account. See, when you incur the cost, at that point of time only we have to ask whether contract will be received by us or not. If it is certain, yes, by us, then it will go to contract profit and loss account. But there is an uncertainty that I may receive, I may not receive, then it goes to general profit and loss account. Even though afterwards I would have received the contract, it will still go to general profit and loss account. So this is all about securing cost. Yeah. So looking at the whole summary of the standard, the areas which we are discussing, the applicability is only applicable to contractors and not builders and developers. Definition: construction contract is a contract specifically negotiated for a construction of an asset or group of asset. It includes demolition, services rendered, and even restoration. When I talk about types of contract, three types of contract. Which are the three types of contract? Fixed price contract, cost plus contract, and hybrid contract. Contract revenue, four things are there. It's nothing but contract price, variations, claims, and incentives. Contract cost, direct cost, and attributable cost. Securing cost, charged to general P&L or charged to contract profit and loss account. Now, the main crux of the standard, for which this standard was actually made, recognition of contract revenue. Very, very important area. Yeah, recognition of contract revenue. Now, when I talk about recognition of contract revenue, I will bifurcate this into two parts. When the final outcome of the contract can be reliably estimated. And the second area, when the final outcome of the contract cannot be estimated reliably. How should you recognize revenue when this is there? How should you recognize revenue when this area is there? When the final outcome cannot be assessed, estimated reliably, then what is to be done? And when the final outcome of the contract can be estimated. Final outcome, see, when I talk about final outcome, means what is the result of this contract, whether I would end up in a profit or loss is a final outcome. Even though it is a loss, I'm able to reliably measure it. Then you fall under part 1, otherwise part 2. First, let's talk about part 1. If the final outcome of the contract can be reliably estimated, the standard says recognize contract revenue based on percentage of completion method. Recognize contract revenue based on percentage of completion method. Recognize revenue based on percentage of completion method. Let's understand what is to be done for this. Here you have to recognize revenue based on the work completed. Yeah, percentage of completion. Now how to find out percentage of completion? So I'll just come here. Methods to calculate percentage of completion. You should recognize revenue only to the extent of work completed. So the first is nothing but cost to total cost method. Cost to total cost method, that is nothing but cost incurred till date divided by total construction cost into 100. This is nothing but the percentage completed. Work, how much work has been completed. Cost to total cost method. Second, I can say physical completion method. Now, there is nothing but physical work completed till date divided by total physical work into 100. For example, this cost to total cost is very, very important because all problems have to be solved based on this only. But the standard has given another also, physical completion. The third is survey method, wherein the work is of so much technicality that I require an expert to give me an opinion with respect to how much work has been completed. So we are basically on this part. If you look properly, we are on this part. When the final outcome of the contract can be reliably estimated, I can know what will be the final outcome. So for that, the standard says use percentage of completion method. Now when I say use percentage of completion method, the point arises how to find out this percentage of completion. So for finding out percentage of completion, there are 3 ways: cost to total cost, yeah, physical completion method, and survey method. Let's do one example which will give us a better idea with respect to say contract revenue 600, year 1, year 2, year 3. Cost incurred till date 100. Estimated cost to complete means how much more expenses I will be incurring. Let's say it's 200. Cost incurred till date 200. I still feel it will be 200, and ultimately let's say 450. Okay, so how should this be taken care of? So recognition of contract revenue. Now for this we can just make a table. Year 1, year 2, year 3, contract revenue. Of course, it is 600. So I'll just write it down. It is 600 for all 3 years. The second is cost incurred till date plus estimated cost to complete. There is nothing but total contract cost. Then my next working will be percentage of completion, how much work is complete. Contract revenue till date contract revenue for current year, contract cost for current year, and profit and loss. Yeah, we will just see this in a single page. This is what we are going to do. So we have been given an information, contract revenue 600, cost incurred and all those things. What I can write down one by one? Yeah. Cost incurred till date is 100. I'm estimating that future 200 will be incurred. So can I say my total cost is 300? What is the percentage of completion? Cost incurred till date divided by total contract cost into 100. So can I say 33.33%? That is nothing but 1/3. 33% work is over. So how much revenue should I recognize? 600 into 33.33% recurring, that is 200. What will be the revenue for current year? Cumulative. This is till date. There is nothing but cumulative revenue. So this will be 200. Cost for current year. What is the cost for current year? Till date it is 100. So it's 100 only. So the profit to be recognized is 100. Very simple. Coming into the next year. Cost incurred till date. What is the cost incurred till date? 200. Okay, so cost incurred is 200. You estimate that still 200 will be there. So my total contract cost will be 400. Percentage of completion 200 divide this 200 divided by 400 into 100. Can I say it's 50% work is over? 50% work is over. So how much revenue should I recognize? 600 into 50%. That is nothing but 300 revenue should I recognize. Now 300 revenue I am recognizing. So contract revenue for current year, 300 minus 200, can I say 100 is the contract revenue for current year? And what is the cost for the current year? Total till date it is 200. So 200 minus 100, it is 100. So what is the revenue which is recognized for this year is 0. Nothing is to be recognized for this year. We have already recognized the profit. So now revenue will be recognized. Third year. Cost incurred till date 450. Of course there will be no future, so 450. So the percentage of completion is 100%. The whole 600 will be recognized. So what is the revenue for the current year? So 600 minus 300, it is nothing but 300 is the revenue for current year. 600 minus 300. Then what is the contract cost for current year? Look here. Till date 450. Previous year 200. 450 minus 200. That is nothing but 250. So my profit is 50. Yeah. This is to be done if future is known to us 50. So if you look properly, your total profit is 150, which is very much correct. Your total cost is 450. This is 600. 450 minus 600. 600 minus 450. Can I say 150 is my profit? But this 150 is recognized over a period of time. Yeah. That is nothing but recognition of contract revenue. We were basically on this area. When the final outcome of the contract can be reliably estimated. Recognize contract revenue based on percentage of completion. Now within this only, we have a link. I'll come on second area, this area later on. First, only on this first part I can say that what if the total contract loss is more than your total contract revenue or total contract price. Total cost is more than your total contract price. And this is where the standard talks about this area, provision for expected loss. We have to create a provision for expected loss. So I can just help you with an example there. It says, if the total contract cost exceeds the total contract revenue, then total loss is to be recognized in the year immediately by creating provision for expected loss. Whether the work has started or not, whether you are going to make profit on similar contracts, whatsoever it may be, the whole amount of provision should be created, or I can say the total loss should be recognized. To recognize the total loss, we have to create provision for any shortfall which is not getting recognized. Let's understand through an example. Yeah. Contract price is 600, cost incurred 400 in the first year. We are estimating that will still incur 400. So now in year 1 only it is known that there will be loss on this contract. If we go with percentage of completion this way, the way what we did for this previous example, percentage of completion, what is happening? The profit is spreading out. Same way, the loss will also be spread out, or I can say the loss will be recognized in this 3 years or 2 years, the way the profit is recognized. The standard does not want us to go for this. The standard says the total loss is to be recognized immediately by creating a provision for expected loss. Now, I can just go with the solution what we had earlier, year 1, year 2. Cost incurred till date. I'll just write down. Contract revenue 600. Cost incurred till date 400 plus estimated cost to complete 400. So my total cost is 800. Percentage of completion 400 divided by 800, so that's nothing but 50%. Contract revenue till date 50% of 600, that is nothing but 300. I'll again say contract revenue for current year, it will be same 300 only. Yeah, first year it's same cumulative, and The year on basis is also same. Contract cost 400. So now if you look properly, what is happening is revenue is 300, cost is 400, so 100 rupees loss is getting recognized. But what does the standard say? The standard says total loss on that contract is when a total loss, if you look properly, your total loss is 200. How did I get 200? If you look properly, your total cost here is 800, your contract price is 600 here, contract price 600, cost is 800, total loss is 200. So what will I do? I want a total loss of 200, so I will create a provision for loss. So what is the provision for loss? 100. So then I will get profit or loss. 200 negative. So if somebody asks you only find out how much provision, so you can just say contract loss, or like I said total contract loss minus difference between the contract revenue and the contract cost. This is what you can have. Like my total contract loss was 200. The amount which was getting recognized was 100. Of course, loss, don't say minus 100, minus plus, please don't show all these things. This is nothing but the loss getting a difference between the contract revenue and contract cost. There is nothing but the loss getting recognized. This is the loss which is getting recognized based on percentage of completion. I don't want only that much loss. I want total loss. So 200 minus 100, can I say 100 is my loss? Now some of you will be thinking, दूसरा साल में क्या होएगा? कुछ नहीं, same. Cost incurred till date. Till now, how much cost was incurred? 800. Estimate cost dash. So this is 800. Percentage of completion 100%. So revenue 100% of what is your revenue? 600. So it will be 600. Contract revenue till date is 600. इस साल का कितना? 600 minus 300 इसका 300. Cost कितना? 800 is till date minus 400. So it's 400. Don't worry, this provision for loss will be reversed off. So 100 is reverse off. So what I'm going to get is 0. No loss will be recognized in the subsequent year because we have already recognized the loss in the current year. This is what is all about your provision for expected loss. Yeah. So how to find out provision? It is nothing but total contract loss less loss getting recognized based on percentage of completion. Yeah, total contract loss less loss recognized as per percentage of completion. Loss as per percentage of completion. Now what we were discussing? We were discussing, if you look properly, this area. Recognition of contract revenue. So first part was when final outcome of the contract can be reliably estimated. So we learned that it has to be based on percentage of completion method. How to find out percentage of completion method? We had 3 ways. The most important way was cost to total cost method. And in that we also learned to create provision for expected loss. How to create provision for expected loss? Total contract loss. पूरे contract को खत्म करेगा तो what will be the loss? That is total contract loss minus loss getting recognized as per percentage of completion. Now I come upon the second area. The second area is nothing but when the final outcome of the contract here cannot be reliably estimated. The standard says recognize contract revenue only to the extent of costs incurred. The recovery of which is probable. You should recognize contract revenue only to the extent of cost incurred, the recovery of which is probable. Means you don't know what will be a total cost. There is a big question mark. So if you don't know total cost, you are not able to know what would be the final outcome, whether it will be profit or loss. कुछ मालूम नहीं है. So what does the standard say? Standard says that you just recognize revenue, but how much revenue? Jitna karcha utna revenue. Means whatever cost you have incurred in this year, that much revenue you should recognize, provided you are going to get recovery of the revenue recognized. Clear? Yeah. Now this is this part. We move to the part of disclosures. What are the disclosures required? Sorry. Number 1, contract revenue recognized. Contract cost recognized. Profit or loss on the contract. Progress billings. What is progress billings? See, as the work is going on, we'll not wait till 5 years are completed to get our money. As and when the work starts, we will start raising the bill on the customer. So that is nothing but progress billings. Retention. Of course, the contractee will not pay me the full amount. What will contractee say? Contractee will say, sir, I will keep some 10% now, so that I can verify the work whether it is done as per standard or not. It is referred as retentions. Amount due from customer and amount due to customer. Now this is an important area. Due from customer and due to customer. Nothing but contract revenue, whatever is your contract revenue till date, or what is the revenue till date. From that, what we have to do, till date, from that we have to just reduce off contract cost. So what you get is nothing but profit or loss. Just find out what is your cumulative profit or loss on this. Cumulative profit or loss. Once you get this idea, there is nothing but contract revenue till date minus contract cost. You will get some cumulative profit and loss. Then what is to be done? Contract cost plus profit or minus loss. That is till date. What is means? I'm talking about till date. Contract cost till date plus profit or minus loss. Of course, if it is profit, I will add. If it is loss, I will deduct. Minus progress billings. Of course, till date. Minus progress billing till date. So at every point of time, I should find out contract revenue till date minus contract cost till date. I will get profit and loss till date. And then what I have to do? Contract cost till date plus or minus profit or loss till date minus progress billings till date, cumulative. If this figure is positive, then amount is due from customer. If this figure, this contract cost is co plus or minus profit, depends, minus progress billings is negative, then amount is due to customer. So this is our end of AS7. We will go for problems. Let's now go for some questions and answers on AS7. So we have a first question here. B Limited undertook a construction contract for 50 crores in April 2014. The cost of the construction was initially estimated at 35 crores. The contract is to be completed in 3 years. While executing the contract, the company estimated the cost of completion of 53 crores. Company is estimating that it will be 53 crores. Can the company provide for the expected loss? It should provide for expected loss. So the company should provide for the whole amount of expected loss of 3 crores. Now how did I get this 3 crores? 53 minus 50 is nothing but 3 crores. So by creating a provision also. Of course, how much amount of provision is to be created is not asked in the question, so we need not answer how much provision, but we should create an provision and the total loss of 3 crore should be recognized immediately. Yeah, this is the solution. Here it is. So the total loss of 3 crores. Moving on to the next question. A construction contract for a fixed price contract of 9,000 is build a bridge in 3 years. Summary is given. Initial 9,000, 9,200, 9,200. There is nothing but variation. The costs have been incurred. 2093, 6168, 8100. Estimated profit for whole contract 950, 1,000. Includes 100 lakhs of standard materials stored at the site to be used in year 3 to complete the works. Means this actual cost is not 6168, it will be 6068. Excludes 100 lakhs of standard material, means this is not 8100, it will be 8200. Okay, so the variation in cost and revenue in year 2 has been approved by the customer and something like this. We have to find out what will be the contract cost, contract revenue, and of course profit and loss. Now if you look properly, there is a trickiness given in this question. They have not given us how much cost will be incurred to complete the contract. Instead of that, they have given us the profit. But we can also find out, if the contract is 9,000, 950 is profit, so can I say 8050 is my total cost till date? My total cost will be 8050. And till now I have incurred 2093. So 2093 divided by 8050, I will get percentage of completion. Here if you look properly, your total revenue is 9,200. Estimated profit is 1,000. So can I say 8,200? Your total revenue is 9,200. Profit is 1,000. So again 8,200 is nothing but my total cost. Once I get my total cost, I can easily find out cost incurred till date divided by total cost. I will get percentage of completion, and then the way we completed example 1, we can go for the same way. Yeah. So here the answer is 9,950. So total cost is 8050. Cost incurs 2093. So we get 26%. Same way here. I'm taking 6068. Why? Because that 100 of standard material is not to be considered. And here it is added. So 74 and 100. So we have just given up in a basic way. How much revenue will be recognized? 9,000 into 26%. Expense 8050. How did I get 8050? Here it was total expense 2093. So profit is 247. Here cumulative 9,200 into 74. We can prepare that table also. Year 1, year 2, year 3. This is just a way of presentation. You may just go through it. Out of this 6808 is nothing but revenue for 2 years from that revenue of previous year, that is, this is to be deducted. Cost of previous year is to be deducted. So I get revenue for the current year and profit for the current year. So when I go for year 3, the total contract revenue is recognized. From that I will deduct what? Cumulative cost of 2 years, cumulative cost and revenue of 2 years. So I get what is contract revenue for current year, contract cost for current year. Yeah. So this is your solution. This can be presented in alternative way where you say particulars year 1, year 2, year 3 and so on. So this is where we end our AS 7.